Jim Klauck here on the Beach Money Podcast. I'm your host, and I'd like to thank Jordan Adler for allowing me to be here each and every week, interviewing fantastic people who are either living a beach money life and or can help you live a beach money life. Warren Taryle is with me today. He's a CPA. Warren, how are you?
I'm doing great. How are you today?
I am living the dream. Thanks so much for asking. I am wound up because I know you and I are going to have a great conversation on what some people might think may be boring. And that's about, what you do as a CPA. When you talk about accounting, it's not all that sexy. I find it fascinating, and I find it a really neat game, especially if you have a business. Because if you're a W-2 income earner, that's one thing. It's kind of straightforward. But if you have a businesses, there's a lot of neat things you can do that are legit that can make you wealthier. So before we get into that, why don't you tell everyone a little bit about yourself and a little bit about your business? And also, I love your slogan, paying your fair share is for suckers. So talk about all that.
There we go. All right. You're going to get me sidetracked on my slogan before I start. But I'm Warren Taryle. I'm a CPA here in the state of Arizona. I have clients all over the country now, even several other countries, because for some reason, people in other countries want to invest and do things in the United States, and we get to help them do that. Started my company back in 2004. There's outside my door here, there's a whole crew of people out there working for me now, which is a little weird. I never saw it going growing like this, but it's a great thing. Taxes. We're basically a tax strategy firm because over a lifetime, taxes are going to be the number one expense of any person. That's going to happen. And if you want to live a beach money lifestyle, you got to cut down some of those expenses that you don't need to pay. So taxes might be one of those things you don't need to pay. We can jump into the slogan right there on that. Right now here in the U.S., it's kind of election season. I'm sorry to tell you that. But we're hearing politicians, their favorite thing to say, right, is millionaires and billionaires don't pay their fair share. Well, actually, so then this is why I say this, and people think I'm really weird when I say this, but I say the tax code is fair. And then they look at me sometimes, now you're not giving me that look, so I like you already. But a lot of people give me that really blank look like, what's wrong with you? Of course the tax code is unfair. And I said, no, it's fair because it treats everybody the same. And then they really look at me like I've lost my mind. And I said, okay, let me say it this way. It treats everybody the same that does the same things. See, the tax code is a respecter of actions, not a respecter of persons. It doesn't care who you are. It doesn't care if you're a millionaire or billionaire. If you do the same things as millionaires and billionaires do, you get the same tax treatment as them. So that's why I come back and say, you're entitled to the same tax treatment. If you're not taking it, well, then you're the sucker.
Yeah, I agree with it. I'm going to state it a little differently from my perspective because everyone kind of has their own perspective, and it's somewhat subjective whether or not you believe it's fair or not. I think it's quite fair, but when you're a regular income earner, let's say you're a W-2 income earner, and you make $50,000, you're not paying the same rate the person at 500,000 is. So as you make more money, the rate is different. I could argue that the people who are making more money at the high end in earned income actually are being hit harder as a percentage. Sure. Well, there's no question they are as a percentage of their income. But the argument is, well, they can actually afford it. Nobody wants to hear that, but they can absorb it and they're carrying the rest of the people. And so if it was really fair, okay, everybody would be paying 30 to 45%. But that's right. But someone making 50,000 was like, no, that's okay. Let's start from 0 and go to 10 and then go up from there. But I agree with you, Warren. I think it's extremely equitable. And for business owners, it's a totally different game. And I'll set this up a little bit for me. For the first 15 years of my working life, I worked in the corporate world as a W-2 employee. I had no control over anything when it came to my taxes. I really didn't.
Right.
My employer, by law, took out payroll taxes, and they were supposed to, which they did, never came back to me, but they were supposed to send it off to the tax man. That's a whole nother story. As a business owner, please make sure when you take that money, which you need to, please send it to the right place. Otherwise, you'll get in real trouble. Anyway, Warren knows what I'm talking about, right? So in any case, I was a W-2 income earner, and whatever I made, I had to pay based on the percentage. And there wasn't a lot I could write off. Of course, mortgage, interest, and some, taxes on the property and what. It's pretty straightforward. You could probably do an easy form for most people. Then when I was 36 years old, I went into my own business and businesses, and I'm like, wow, this is a whole different world. Whole different world. And a lot of people say, oh, you're a sucker, Jim. I'm like, why? Because you got to pay both sides of Social Security and Medicare. Ha ha. I'm like, yeah, but there's got to be something that's okay about all this. And it turns out that there's so many different advantages and vehicles, and many people don't take advantage of this. And Warren, I'm about to have you speak on this, but I want to get this out before I forget. It occurred to me in recent years how important it is to have a CPA that knows what is going on, because what the government does is they pass legislation, there's laws, and all of these great opportunities, but you as the business owner are only as good as what you know. So you need to team up with a great professional, a great CPA, and they need to know about things like during COVID, PPP, what is that? And how can I take advantage of it? ERC has been a huge deal for many companies too. A lot of people still don't understand what that is.
And there's a lot of people now who are afraid of the ERC because the IRS has done a great job of marketing to tell people that there's a lot of crooks out there in the ERC world, which there probably are. But if you follow the rules, you're entitled to this thing. Don't be afraid to follow the rules and take what you're entitled to.
I agree. So for those of you who don't know what the ERC program is, Warren, could you talk a little bit about it and how it's different from the PPP program?
Sure. So ERC is basically, it's a credit against payroll taxes that you've paid during part of the COVID shutdown period. And you'll get, and depending on what year you qualify, and you qualify on a per quarter basis. And it's basically a check that comes back to you from the IRS. It's not a loan. It doesn't need to be forgiven. It's basically a refund of some of the payroll taxes that you had paid. There's 3 ways to qualify. And like I said, you qualify on a quarter by quarter basis. So one quarter you can qualify one way, another quarter you can qualify another way. None of the qualifications are better than any other. You just need to hit one of them. The first one is the drop in income on a quarterly basis. So that quarter compared to the same quarter in 2019, you had to have a drop in your gross income. Some of the numbers slipped my head, but I believe it's about 50%. The second qualification is that you were shut down. So, or a part of your business was shut down. Not maybe your entire business doesn't need to have been shut down, but a part of your business, significant part of your business, had to have been shut down. The third way to qualify is if your supply chain was shut down. So if you were trying to sell something and you couldn't get the goods to do it, or your manufacturer, you couldn't get the parts to do it, whatever, because somebody else in your supply chain was shut down, that also qualifies you. So one of those 3 ways, you only need one. In each quarter, you get a check back from the government for those times affected. That's kind of this quick high level view of it. If you qualify, you qualify, and there's no reason to be afraid not to take this money.
I took some money. I was given, anyway, I applied, I received. I know small businesses that got anywhere from $5,000 to $7 million.
Yeah.
Now, that sounds like that just can't be. How could the government stroke a check for $7 million? Well, this was a larger company. They were doing over $100 million a year, and it just so happened that the formula said this is what it is based on payroll. And there are so many different opportunities that the government gives us. But Warren, back me up on this because I think I'm right. The government is really trying to help us, small business owners, large business, and the economy, because it's good business, right? It's important for the economy to move forward. Otherwise, they don't get reelected. It's bad for their business. So they try to stimulate it and so forth. We hear about stimulus checks and so forth. But the government's really good at putting these programs together and putting them out. But what I don't think they're good at is notifying everybody and convincing them that they need to call someone like their CPA, like Warren, and do this. I could go on about Social Security Administration. They're pretty horrible. I would not go there for advice if you're thinking of retiring soon. I would look privately, read some books, talk to some people who know about that, because they're just not equipped at that level. They're good at the higher level, saying we're going to give you these programs, but be careful who you try to get a hold of and so forth. Same with the IRS. They're very frustrating. Don't get into IRS trouble, everybody, because that's a nightmare. So, but don't you agree with me that these programs are there? They're good,
sure.
But it's incumbent upon the business owner to research it and learn.
It is, and you're kind of at odds sometimes. But like I said earlier, we're kind of in election time rolling up, and so the politicians love to say, small business, that's the backbone of our economy, and they want to be seen out there. And so sometimes they actually do what they say. And so they create tax breaks for small businesses. Real estate, one of my favorite things, rental real estate. Rental real estate, if you want tax breaks, that's the hugest win for you. If you want to find some tremendous tax savings, look into investing in rental real estate. But people say, why? Well, I say, well, look at the government's incentive in this. Like, if you're investing in an apartment building or even a rental house, right? What are you doing? You're providing a place for people to live. If the private sector didn't do this, then the government would have to do it. And somebody in government smart enough to know they do a horrible job of housing. So let's incentivize, sometimes I like to say bribe, the public into doing it themselves by giving them these tax breaks. And what's the biggest proof that they want you to do this? And the biggest tax break they give us is something called depreciation. So we get a rental property, we get to take a deduction for depreciation, which is a non-cash expense, which means that nothing's coming out of our pocket, but we still get this deduction for the depreciation of our property. But if we buy the right property, we all know what that property doesn't depreciate, it actually appreciates. It's not that the government's that screwed up and doesn't understand things. No, they're trying to, again, bribe us or incentivize us to help them out with this rental real estate.
I love rental income. It's a great investment for anyone if they're looking to dabble. So if you have a full-time W-2 job and you want to kind of have your own side hustle, just buy it. I mean, don't just buy a property. There are all kinds of organizations that you can join that will coach you and mentor you if you want to go that route, because they've done it before, or find someone you know personally who's done it. And I know many, many people who become multimillionaires just from their real estate, and they can leave a legacy. And so what's really cool about the real estate, let's say you had 10 properties and they're each bringing you $500 positive cash flow a month. That's $5,000. But at the same time, they're appreciating, to Warren's point, and the tax advantages are huge. You can trade one property into another one, which is unique in that world. You can't do that with other types of things without these big penalties. So you can kind of upgrade your properties. You can always sell one off if you want to. There's all kinds of things you can do, and you can leave a huge legacy to your heirs. And these are
saving taxes all the way along too. So
Oh,
in
sure.
your example, that $5,000 that you're putting in the bank account every month, so or every year, let's say you get $5,000 a year, right? Just pick a little number. So you put $5,000 a year in your bank account. But let's also say because of that, there's $8,000 worth of depreciation on those properties. Again, it didn't cost you a dime for the depreciation. You get $8,000 deduction for depreciation. So basically, you show a $3,000 loss, even though you put $5,000 in the bank.
That's got to be pretty good for your taxes, because there would be no taxes on that, right? Because you can't
Right,
tax negative or zero.
right.
And so that's, I mean, those are great vehicles. Now, don't get me wrong, owning real estate is real estate. So, I mean, there are some issues with that, especially if you're a small guy who owns it, because you might be the guy who goes to fix the toilet. So and there's all different levels of that. But I agree with you, Warren. It is a great, it's a great investment. What are some obvious things to you that most small business owners don't take advantage of, or they think it's a scam and they're afraid to get involved in it?
So owning a business is crucial if you want to save taxes. So like I said, we're a tax strategy firm. What's the key? One of the key elements, or I should say, the key element is you need your own business. If you don't have your own business, maybe you're doing some significant investing in a particular area, then we have some room to work. Like you had mentioned earlier, if you're a W-2 guy and that's kind of all you're doing, yeah, well, God bless you, but H&R Block can help you. There's really not much we can do. We need that leverage, that place that we can go, someplace that we can, again, take advantage of the things the government's given us. We look in a business, there's really three primary areas we focus on. We don't do weird stuff like hide your money offshore or do any of these kinds of things, right? We want to look at one, do you have the right kind of business entity structure around you? Whether it's LLCs, S Corp, C corporations, partnerships. Every kind of business entity is good at certain things and bad at other things. So a lot of people will go and maybe they're starting a business and their barber tells them, well, I have my business as an S corp. Everybody needs to be an S corp. That's not true. S corps are great for certain things and for certain people, and not so much for others. So we want to match those things up. There's no bad entity and there's no good entity. They're all good for certain things. The next thing we really want to look at, and this is my favorite part, is are you deducting everything that you're entitled to deduct? And what the tax code says, I don't have any of the books behind me anymore. It's all digital now, but the tax code, the book's about that thick and it's written on that paper that's almost see-through, and there's 8 books in 8 volumes of those. That's pretty much the tax code. And of all those pages, the only thing it really says about what a business is allowed to deduct is it says you're allowed to deduct anything that is ordinary and necessary. Ordinary and necessary. And it's intentionally that vague because there's no way the government can know what every kind of business there is, what every type of business there is, right? It's impossible for them to know that. People are coming up with new ideas every day. I had an IRS agent who had no idea what a virtual assistant was. So government employees. But so basically they come back to us and say, hey, what is this ordinary and necessary? And I tell people, I translate that to be anytime you go and spend any money, if you stop and ask yourself the question, is what I'm about to spend this money on, will this benefit my business? If the answer is yes, use your business money, it's going to be deductible. If the answer is no, well, then it's personal, it's not deductible. But it's very important that it's not the other way around, right? It's not, does this benefit me personally? Yes, therefore it's not deductible. No, that's not the case at all. You can have personal benefit from something so long as it has a business connection to it. And here's the really, really great part is you're allowed to be wrong. You're allowed to have a really bad idea because it's up to you to say, I think this is going to benefit my business. Everybody else in the world, you might tell them, this is my idea. It's really going to help my business. Everybody else in the world might point and laugh at you and say, it's the most ridiculous thing I ever heard of. Doesn't matter. If you believe it's going to help your business, it's deductible. I like to say the government requires you to be a business person. They don't require you to be a good business person.
That's for sure. As you know, 8, 9 out of 10 businesses over the first 5 or so years are likely to fail. Tremendous amount of failure in business. I will say self-employment, which I don't necessarily consider a true business. There's kind of a difference in my mind. When you're self-employed, you're less likely to fail. You just have less to lose because there's just not as much invested, right? It's usually just you. Warren, I don't know if you're familiar with Robert Kiyosaki and his 4 quadrants, but he's got the E for employee. I've been one of those. I've been the S, which is self-employed. And I've been the B, a business owner. And I've never been a true I, which is an investor. I have investments, but I don't make my living as an investor. And, it's funny. A lot of people say, I'm an investor. I say, really? How many millions of dollars do you have I don't have millions. I've got 200,000. I said, you can't live off of that. So, and so depending upon where you are, everything's different too, right? Because the employee, as we discussed, has a whole different tax responsibility and structure than someone who's self-employed, than someone who's a business owner. And when you're a business owner, that's really different. But even as a self-employed person, you're technically a business. Right. So you have a lot of the advantages the business owner has, if you will.
Right. We're opening up that whole ordinary and necessary. There's things that there's more things that are ordinary and necessary when you have a business behind you. But one of the we like to look through it. Where people are spending money? Where are you spending your money right now? And I probably shouldn't say this in the recording, but what the heck? We like to look at where people are spending money, right? And there's nothing wrong with this, right? And where they're spending it personally. Because in a small business, there's a very, very fine line between your personal life and your business life. I mean, like I know, like even working with Jordan, right? We're doing things with Jordan all the time. Is it business? Is it personal? I love hanging out with Jordan. I get inspired every time I'm with him. I come home with like 10 new ideas. But how much is that is business? How much is that personal? It's a very, very fine line that we get to walk. And I would say pretty much most of the time I do anything with Jordan, it's beneficial to my business. So it's going to be deductible, right? I follow that same rule. So when you have such a fine line, we really, really want you to focus. Look at, and people hate doing this, and that's okay. But look at your credit card statements. Look at your bank statements. Where's your money going? There might be an area that you say, there's no way this could be part of my business, but I spend a lot of money there. So maybe that might be a passion of yours, right? You don't have to love and be passionate about your business for it to succeed, but it sure helps. And so if we can find a section of things that you're doing, maybe there's a new business inside of one of your old businesses, that we need to launch, and then all of a sudden these expenses become deductible. Look at Jordan's cigar brand, right? There's a whole new business in there. Jordan has a profit motive. He wants to make a profit in his cigar business. Of course he does. But does he get to now deduct going around, traveling, looking at places that tobacco's grown and seeing other people's cigars and talking about it? So we want to look at those things. If that makes any sense.
Yeah, no, it makes a lot of sense. Something as simple as you have an employee at the office, her name is Susie, and it's her birthday. Are we buying the cake personally, or is the business buying it? The business is buying it. She's an employee, and even though it's fun for us during the break in the break room, this is good for business, right? Because we're helping a team member, right? So, I mean, but some people might question that. It's like, well, no, it's business. Wouldn't you agree?
I would agree. And let's take it one step further. As say Susie isn't your employee, but she's another vendor that you refer people to or you use, or maybe she's a client and she still has that birthday. Wouldn't it also be great to take her out for her birthday? Wouldn't that build the bond between your company and her company?
Yeah, that's called a business lunch. You only get 50% on that, though.
Yeah. Well,
Because they
you
changed that, but
we did get 100% for the past 2 years because they wanted to encourage people to go out to restaurants. But I'll take 50% over 0% any day.
yeah. And it's really interesting. Some things that have changed, and correct me if I'm wrong, Warren, and I think this was during Donald Trump's reign in the White House, was certain things like buying seasons tickets at the sporting event and so forth. Those used to be 100% something you could write off. Country club, maybe that type of stuff, but they kind of
Yeah.
changed that.
Well, country club, they kind of ruled out a long time ago. I have a way around that, but never mind. But uh, entertainment expense used to be, and it's hard. It's been hard for me not to say meals and entertainment. I always say M&E, just group them back together because they had the same rule, that 50% rule, and the same rules to qualify to take that deduction. And I had to stop saying it because after the Trump tax cuts, one of the things we sacrificed was entertainment expenses. So you can no longer deduct entertainment expenses. But if you took a client to a ball game, let's say, and you got the suite, and I actually talked to a local sports team about how to change their invoicing. So they would used to invoice you for the suite, which included all the food and catering that came to your suite. It was one big suite. Told them if they separately invoice it, because you're still allowed to deduct the meals. So if it's still a business purpose, you rent out that suite at the ball game, right? If they invoice you separately for the meals for the catering portion, that part's still deductible. It's just the part for the tickets to be there isn't. So again, you need to understand how the rules work. The other thing that was really buried in there too is you're allowed entertainment expense if it's predominantly for your employees. So if you're doing an employee event, you're not inviting clients to it, you're taking your employees to a baseball game, getting the suite to reward them for a hardworking tax season or whatever, that's deductible because it's for the benefit of your employees.
Sure. And you have to use some common sense when you're doing this. And also for those of you who are really terrified by the IRS, you have to understand too, and this is from my experience, and I don't know if Warren will agree with me or not, but everything is fine until someone from the IRS starts questioning things. And I've been told by financial mentors, if you will, whether it's been everyone from my financial advisor to my CPA and other small business owners, that the most important thing to do is pay your taxes. So pay your taxes and don't worry about the expenses so much, because the government kind of has this little algorithm. If you're not paying a lot of taxes and they suspect there's something, a flag goes up and then they audit. You don't want the audit, especially if you're not so sure that some of these expenses are really good business expenses, and it'll be the IRS's responsibility at that point to, pick through the shoebox, right? But if you're like making good money and you're paying your taxes, they tend not to bother you as much. Is that fair as a general statement?
Generally it's fair. So the IRS has this DISC kind of thing that they've researched, and this was done a long time ago, that they kind of compare industries and different numbers and by averaging a bunch of tax returns together. And to come up with that data, they did these random audits, and they call them like the audit from hell, because they audited every single line of the tax return, not because they suspected anything, but they were trying to build their database. Unfortunately, part of this new authorization from Congress, where IRS got funded again, the IRS is saying, hey, our numbers are so dated, we want to go back to that, and we want to start these audits all over again, where so we can build a new database to have new numbers to compare things by, because the world has changed a whole lot. I mean, I think these numbers came about in the 80s or the 90s was the last time they did this. And, with the digital world now, it's, those numbers are very, very skewed. My suggestion is, let's not do anything wrong. I mean, some of the things we're talking about sound like they might be wrong, but we're not. Let's document everything. The most important thing you can do is documentation. Just document everything. I have found, now it's getting stuff, in IRS audits, I find if you show up to that audit with a bunch of information, the IRS agent wants to leave already. They've got some time pressure. Most people come into the audit, they don't have 90% of what they're asking for. Those are easy for the auditor. They can, get you. If you got all your stuff, and it's going to take them a long time to go through all this information, they are going to skim it and just gloss over things because they think this guy's got all this stuff. My boss is going to be on me because this audit's taking longer than it's supposed to be. Let's just move on. I had one IRS audit experience. The auditor, actually, we had everything so well nailed down. The IRS agent said, "Aren't you going to give us something?" Like, what? Aren't you? It's like, let us walk away with some small victory so I can go to my boss. I'm like, well, you tell me what's wrong then. But
yeah.
And the other thing, sorry, but the other thing about IRS agents is, and especially now, because a lot of them are brand new, they've been going on this hiring spree, right? I had one of my right-hand guys, when he first started with me and he was coming along, I said, all right, he's got to that stage where he should sit in on an audit. And not that we've had that many, but he sat in, I had him sit in on this audit just to kind of get the experience and learn, and we were talking. And he walked away. His question was, wow, that wasn't how I expected it to go. I said, well, how did you expect it to go? He said, well, I thought they'd come in and read us all these rules and tell us what we're doing wrong. He said, I didn't know we had to explain the rules to them.
Yeah. Well, to your point, a lot of new people getting into that job at the IRS. You've been doing your job for a long time. And I said this earlier in this conversation today, Warren, that often the IRS, Social Security Administration, go down the list, they really aren't the best people to go to when it comes to understanding what the people higher up in those or what the government has put out. So it starts up here and then it drops. And then you get a lot of people who are civil servants who are just doing their job, but they don't necessarily know a lot. And that's why it's so important for you as an individual and a business owner to know as much as you can. And for us as business owners, it's challenging. So we need to team up with people like Warren. You need a good attorney. You need good people who can help you in all these facets of your business. Because when things come up, you aren't the expert. You need to go to your CPA and your attorney and your other advisors, especially as your company gets bigger. Don't you agree?
I agree. I'll give you one of my favorite quotes from a federal judge. Everybody, probably one of the most famous federal judges, Justice Leonard Hand. And let's take a sidestep here and say, what a cool name, right? And names are so important because it makes you memorable. Like and I go back and look at any of your favorite sports stars, and why do you remember them so much? Well, they might have had a really memorable name, and then you notice their record. But anyway, so Leonard Hand had a lot of rulings and quotes on taxes. One said, he says, in the United States, there's two tax systems: the tax system for the informed and the tax system for the uninformed, and both are legal.
Exactly. And like we've said, it's incumbent upon you, the individual, to become educated. Don't leave money on the table and don't make unnecessary mistakes. So if you think that you might be making a mistake, contact a professional CPA. And if you think that maybe you're paying for something personally that the business should be paying for, contact your CPA, right? So speaking about contacting CPAs, you've got a freebie for our viewers today. They can actually get free advice from you and other advisors in your field on a weekly basis. Tell us a little bit about that.
Yeah, so the way it works, we love answering people's questions, right? And before we started this, we'd get a lot of people calling in, asking us, I just have a quick question. I just have a quick question. That's perfectly fine, but we found out we weren't getting any work done. We were answering too many questions. So we decided, what if we pull this all together to one day a week? So every Thursday at 3 o'clock Pacific time, we do a conference call. It's not on Zoom or anything like that. It's just a regular old fashioned conference call. We don't record it. Don't have to worry about any of that stuff. And the different accountants here in the office, we take turns each week manning the call. And it's just for people who have a quick question. You have to be aware people are going to be listening, so it's not private. But you don't have to say who you are, and we'll answer your question as best we can. Again, not knowing exactly who you are, but we will give you that answer that you need. And if you're one of those really weird people that are kind of bored on a Thursday afternoon and you want to hear accountants talking about taxes, you're free to call in and listen to other people's questions too. There's a lot of people doing similar things to what you guys are doing, so you might actually hear questions that you didn't even know you had, or learn something new. So it's I'm a nerdy accountant, so I think it's kind of fun. But the way to get access to it, we have a website where there's a quick little sign up for it. It's beachmoneycpa.com. That should be easy to remember. Just beachmoneycpa.com. Go to it, ask you a couple of questions, fill it out. You'll get an email that invites you to come to the call with the phone number and the PIN number you need. You'll also be kind of in our database. If you don't want to get emails from us, just unsubscribe. It's no big deal. But come to that call. It's a great resource that's available. You can also, from those emails, link to the rest of our firm if you want us to help you with anything you need.
beachmoneycpa.com.
Right.
That is also going to be listed in the show notes, everybody. So if you haven't had a chance to write it down, don't worry. It's going to be in the notes section of this podcast. Warren, I want to thank you. This is so awesome. And I love the way that you cater to people who want to live a beach money lifestyle. It's important to, so many of us who live that way. I can tell that you are an informed individual in your field of expertise, and you also like to kind of dig in and solve the problem. So I encourage everybody to reach out to you. One more quick question. You are in Arizona. You say you've got clients around the world. Can you help anyone in any state?
We can, because federal law, I mean, our biggest burden is the IRS's federal tax law, right? And that applies equally all over. We have software that helps us figure out all the intricacies of the different states. Some states I like a little less than other states, but we can work with all of those states. I can't think of a single state we don't have a client in currently, and we now have a few people in other countries. We have some Germans, we have Austrians, we have Australians, we have Canadians. U.S. happens to be a great place for people in other countries to want to invest in and get businesses going. So we help them too.
Terrific. Warren, Taryle, thank you so much for your time today. I really appreciate it. You have yourself a beautiful beach money day.
Thank you. You too.